following is a presentation of TFNN. The Global Market Pulse with your host, John Logan. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, John Logan.
Hi, guys. Welcome back to the show. And what do you know? We're up, 600 Dow points on the futures. Amazing. This is, we've been talking about, good Lord, going to sleep at night. You never know what's going to happen in the morning. It's good reason to not stay in the markets overnight. But if you did, if you got long on the close, that's just completely awesome. I'm happy for you. Make sure you put your stops in even when you're doing crazy things like that. I think we've got Joey Jong on the phone again from Asia.
Here.
Hey, Joey.
How are you guys?
Hey, man. Good to hear you. I thought we'd just kind of continue. There's so much to talk about coming out of Asia and China specifically. You're in Hong Kong. We had a little disconnect in the Hong Kong markets and the Chinese mainland markets, and I just wanted to just kind of continue the conversation. And by the way, I see that Susan Lee, one of your good friends, is back in Hong Kong on the CNBC Asia situation. She was in.
That's fantastic.
Yeah, it's fantastic for you. So look, what the heck is going on now?
Well, yesterday I mentioned that there was going to be they were going to take out the bazooka, and they did today. I didn't expect it till about Thursday or Friday because they usually do it towards the weekend. But because the market, half the stocks were limit down today in China, so in the A shares, so they really were kind of forced to do it today.
Right.
I think they were trying to hold out till Friday, but today was just too, if they didn't do anything today, it might have opened, limit down again tomorrow, and then they'd be in a real tough position. So I think they were kind of forced to do it today, and the futures has reacted, accordingly. But I don't necessarily think that this is gonna last too long, and the reason being is that the U.S. is gonna be tightening and probably in December, and China is not gonna cut rates next week. So it's gonna and they've already said that they were gonna hold back from intervening further in the market because they've already bought too much stocks. They've already got the pension funds buying it. They've got all kinds of government vehicles buying it already. So I think they filled their boots already.
You know what? I'm wondering this. I was thinking about this, and I was like, maybe I'm stupid for even thinking this way, but because everything's on the table, and you talked about the kitchen sink yesterday, would they do something like this? Would they do something like, okay, you said government intervention, and they're kind of picking up some equities and, whatever the plunge protection version of, the Chinese way of doing it. Would they do something like this that they would make a mandate that they'd have to get out of their holdings first, and maybe if somebody wanted to buy stocks, they had to buy stocks from the government, and therefore the government would actually make a lot of money over there? Is that even something remotely that could happen?
That's not even possible. Even if they wanted to do that, they wouldn't be able to. Nobody would let them. Right. No, probably not. Okay.
I was just thinking wild things last night. I was like, you know what? There's got to be a way that they can actually squeeze some extra juice out of this. But you know what? What's the temperature in Hong Kong? I mean, because obviously there's a little, spread going on between what's going on in the Hong Kong markets and the Shanghai and the Chinese markets.
Well, no, the Hong Kong markets have been kind of. It's been very weak as well. It hasn't been quite as bad as China, but
right.
But I think it's fallen, before China. So China's basically playing catch up because a lot of those stocks were limit down. So the fall is basically softened by the limit down rule that they have. But so Hong Kong kind of fell faster.
Right.
And if you look at the Hong Kong futures, I mean, it fell fast and furious for the last few days.
Right.
And it's bounced just as fast and furious today. So,
Right.
but 10,000 level is a very big resistance level. And so is, I'm looking at 10,000 on the 8-share index. I'm looking at 1950 on the S&P as resistance, as well as on the Nasdaq. I'm looking at 4180 being the resistance there as well. So we're hitting a lot of resistance levels on the spike here, and I don't think we're gonna get through it. Same with the Aussie yen and the Aussie dollar. We kind of we were in free fall yesterday.
No kidding.
And today
I couldn't believe what the
really
Aussie dollar
regained 2/3 of the fall yesterday.
Right.
So I think I don't think we're gonna get above these levels now. This week is extremely, extremely important because this is month-end weekend, and this is below the 12-month moving average of roughly just above 2,000. So if we're going to close this week below 2,000 on the S&P, which I almost think it's a certainty, then this market is going to go back down again.
Yeah. So what my question is, all things considered, everything we just talked about, and the so-called measures, the new measures being taken, which if something doesn't work out to where they want it to work out the way that they're hoping it works out, then they'll probably come up with some new innovative concepts to deal with this in China. Where do you? Okay, so the S&Ps right now, you're saying. Let's just talk because most folks are focusing obviously on the Nasdaq and the S&Ps that are listening to this show. You're saying it's probably not the worst idea in the world to look for resistance areas to sell these type of kind of, relief valve moves up right now.
Correct, and I think because we've done so much technical damage, and this bounce back is expected because we were in a free fall situation yesterday, so the bounce back is very normal. But this bounce back will most likely fail because we're so far below the resistance and we're at a crucial time of the month. We're right at month end, and if it closes here, the month actually breaks the 12-month trend line, and I think we go lower.
Right.
So 1680 to 1700 is the first target, which is the 200 week moving average.
Oh, you mean on the downside, the big targets are 1680 to 1700?
Yeah, roughly.
Okay. So that's 16. What is that? 250 points lower, approximately, on the S&P. All right. So I'm going to throw out some levels here. The weird thing is while you're talking, I'm sitting here looking at the long term and the intermediate, and I have zero indications on the algorithm that we use to output new balanced areas that there's nothing even trying to appear, which is really bearish, really, and it's a overhanging bearish tone because it means there's no really demand area trying to happen. Yeah. And therefore, what you're saying is, spot on.
I think, like with the Chinese cutting rates, I looked at the profiles on the 240 minute profiles on the S&P, and that the top of the profile was around 1950. Okay. It couldn't even get to there, even with the Chinese rate cut.
Right.
It got to about 45 or so, and then it headed straight back down, which, really, I mean, even with the Chinese rate cut, which is the whole reason that people were selling this, it still couldn't even get above the 240-day, let alone, the daily or the weekly. But
Right.
it couldn't even get above the 240-day, not even for a second. It got close. So, but
Right.
and then headed straight back down. So, which means that this bounce is actually not that strong. Although it's early in the day, so. We'll
but
see.
just like yesterday, we had I'm looking backwards. I don't know why. I thought the TV was so. Just like yesterday, we had 1,000-point gap down basically in the Dow. That was to be bought. We've got a 6 or maybe even 700-point gap up Dow situation this morning. And is this to be sold on the opening? What do you think? I mean, if there's a lot of guys day trading listening to this show, I mean, is this?
I sure think so. That this is to be sold, and because we didn't even reach those areas where we didn't even get to the 240 minutes resistance.
Right. Oh yeah. Okay. So the 60-minute numbers, guys. This is kind of all I really have to focus on down here for you. If you'll notice, I'm showing it in the den right now. If you'll notice these inflection points and and this is all we've got to go on. So this is what I'm focusing on. Long-term trend down, obviously. Right now, if you'll notice, we hit the lows. Now these profiles are extremely wide. I've never seen a 60-minute profile this wide on what happened the last two balanced areas. We've got a new one we want to talk about in a second. But as you'll notice, we hit the low tick here. We reached a bottom at 1867 yesterday approximately, and that was really to the tick, right to that level. And these levels aren't moving around and painting themselves after the fact to be very cool looking like some of the stuff some other technical providers do. Not going to name any names, Joey, but as you'll notice, 1891 was that other level that we kind of looked at. We hit the POC, came down on fair lows. Now we've shot up above this 1920-50, and we've come and we've used it as support. If you'll notice this, now this is why the scanner is so important, because it gives you these inflection points, and you obviously know the tone of the marketplace or the tide of the marketplace by the breadth situation. Right now, 1920-50 is a big number. And if we start busting down through below there, guys, I know we've kind of come off the highs here pretty significantly already, but we could easily, maybe not today, but we could easily start coming back and retesting recent lows, as Joey's talking about, and even fall farther. So I hear the music, Joey. Can you hang around for another small segment? I hope so.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. John takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi guys, welcome. Welcome back to the show. What we're going to do here is Joey had to leave, so I apologize for that. There's just so many things going over there. He's got to tend to right now, and the markets are crazy everywhere. So we're going to forgive him for having to leave, and it's nice to know people that know Susan Lee. It's nice to be in Hong Kong and shake her hand. That's highlight of my life. Anyway. Taking a look at the S&Ps, Joey was talking about some levels. We were looking at our 60-minute charts. This is where we're at. And as you look at these levels, we, I'll always pay attention to, what we have available to us as far as inflection points on the major indices. And some of the things that Joey and I were going to talk about, I'll just kind of continue on along. He talked about the Australian dollar. This was a heck of a move yesterday. We've talked about things on the lows going lower. And, are you supposed to look at this as a selling into rally type situation? I think so. 72, 75, 76. I think you've got kind of an easy picking situation on this. And that's basically retracing back up to the latest breakdown point. And remember, the Chinese, let's just kind of pair that into the Shanghai. They did throw the kitchen sink at it today. We'll probably get some, it's not going to be a straight line down. We're going to get some rallies, but they're going to now have to wait, in my opinion. That they've taken some serious measures lately. They're going to have, just like any government, I mean, you can't keep throwing things at it just because the market goes down. They're going to have to wait and see how this thing shakes out, as Tom would say. And I don't know if they've got a ton more bullets they want to use right now. They've obviously got a lot more bullets than we have over here. So, and if somebody posts something in the den, I'm going to get to it in a second. I just want to cover the broad strokes for everybody before we get into some particulars. Euro, again, I'm a big fan of using this 114.67, 68 level here. If you guys are trading this, that was, kind of Custer's last stance for me right now. This is our weekly, and I'm sitting tight, waiting for this to break below that level. I'm not looking at it as support. Safety play, what have you. I don't know how you want to look at this. The dollar's been getting crushed a little bit, but I'm not a big fan of this going up into that other inflection point up at 125 up here, but it could happen, 125.50. Joey was talking about a hole in the marketplace yesterday. That's definitely the case on the daily and the weekly. This thing can go higher. Be patient on this one. Take your medicine if it goes through your levels, and that's the way we're looking at it. We're going to take a look at the yen. The yen trade has been over for a while. This is, again, we looked at this, the 123.68. That was the, hey, you got to sit tight, wait and see if we can get back above those levels. Had a wicked rally today already. As of yesterday, went to 116. This is why you have to use stops. And this is why we look at profiles appearing above price action. That's what happened at the start of the week. That was at generally the same area as that daily unfair low. And that means we just need to wait. If we're going to try to continue to go along this, that's great. If you went short below that break, that was an insane move down on the yen. But again, I'm not a big fan of shorting this product yet. I want to see some retracements back up into some inflection points, see how it acts, see if the worm is turned on this particular product. And that's the way we're just going to have to treat it. We talked a little bit about, Joey talked a little bit about the NASDAQ. Just tell tech guys something. This was one that, again, showed its hand a little early, was the weaker of the two, this 45.60. This is why we kept saying this is something to play around with here. And if you get stopped out, you get stopped out. But, the NASDAQ was obviously something to pay attention to. What do you do with it now? You've got a big level around 42.24 on this thing. And I don't know if we're going to go back up and touch that, but that's where you'd orient stops around on the NASDAQ. We're up, 600 points this morning pre-market on the futures. I just like yesterday, I don't think that, this is something that's going to hold and go higher, and we're going to have 1,000-point rally today. That's just, in my opinion, that's not going to happen. Can it happen? Yes. Should you put stops in to guard against that? Without question. Let's take a look at the DAX really quick. Here's the big levels on the DAX. Got to get back down below 99.89. I'm not a big fan of buying this one either. You got some serious resistance between 99.89 and about 10,200, but getting below 99.89 is going to put that back on the radar screen as a short candidate. We'll be right back, guys.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how EverBank can help keep your money thriving just the way you want. Is growing your money a priority? EverBank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, guys. Welcome back to the show. We're going to take a look around at some of the usual suspects here because I think you should probably know how to put the puzzle together, all things considered, looking at relative relationships here. Let's take a look at the dollar. Obviously, a little bit of a move up. 95.30 is going to be big-time resistance on this particular trade. That's going to be where we have to get back above for longs to get your kind of toe back in the water on this one. And that coincides to some degree with a little bit of a neighborhood up there at around 96.19. So again, if you're looking at this from the short side, I consider waiting is not a bad idea. I'm kind of not on the short side of the fence with this particular trade. I'm just going to wait and see if we can get back above 95.30. But right now it's a no trade. We had a couple of areas we tried to buy support on this. But again, that's what trading's about. We've been long this for a while. We've made some great points on it, and that's the way trading goes. Let's take a look at the 10-year really quick. And again, we always want to take these so-called orange bars when they start happening. And I want to take a look at the 10-year and look across the board here. And if you see this on the scanner, these yellow peelbacks happening, what this means is indicates that the price instrument is above the top of the current profile value. So yet a new Taos profile is tempting to appear. So that little definition, that is an indicator in itself. And when that started happening today, this morning, or last night, my days are starting to swim together here. That is a sign of a new profile that pretty much is going to lock in here, and that's going to mean that we've got new inflection points. That's an indicator in itself. Here's the long term. We talked about the 129.14 being a target-rich environment yesterday. Instead of shorting against that, that was just a place to kind of take some weight off. And this last leverage area, 127.11, 127.14, that we've been talking about buying, that was a nice little run. It's over for right now. You're going to have to wait until this box appears on the daily to get some new support levels. That's where we're at on that one. Again, the 240s, if you put a gun to your head and force you to play around with this thing, you've got some levels around 128.21 and 129.14 up top. So that's the short-term levels, and we're on that right now on the 10-year. And I think we could bounce around here, especially on the north side on the 10-year. I don't think the U.S. stock market's going to continue to hold a 62, 65, 70-point pre-market gap up on the S&Ps. I think you've got some people that are going to be just thanking the gods that they got a chance to get out of the nightmare that happened yesterday. I think there's going to be some people, you know what? I got a free gift here. I'm going to take it, and I think we could settle back at least back into 1900. All right, that's where I'm at on the S&Ps. Remember, whole numbers psychologically are a big deal in this game. You've got to pay attention to those. Let's take a look at gold. I was a pretty big fan of not being long this product and looking for areas to short. We had 1160, 1168. That was the weekly for highs. Had a hole in the marketplace right there. We moved pretty quickly. 1160 into, and there's that 1168. So the reason we were looking at this is because on the daily and the week we had, we talked about price action moving relatively quickly in these holes. That was kind of our resistance area. Overshot it just a tad. I think we had 1170. Gold is in this fast-moving area by definition. No market participants really were in the market on a large scale in this gap between 1112 and 1160.70. We're going to move around quick in here. So what does that mean you have to do to trade gold? I think you have to drill down into shorter term time frames. This is, again, all in the scanner. 1146, big number there, 1136. So those are your big inflection points there. If you're long gold, you want to keep buying more. Those are the kind of stop-oriented situations. Below 1136, I think you got to be willing to say uncle on that trade. But again, I'm a big fan of waiting for this to have a new profile appear and then be able to use those inflection points to short this product again. Just looking around. We really had a incredible day yesterday and today in soybeans, and I want to pull this up in November situation here, the new crop beans. I just was amazed that we went down to 855 that quickly from 9. So probably in a less than 24-hour span, we traveled 50 cents a bushel on the downside in beans, and that was after the basic downtrend that we've been in since 1050. So those are the types of moves, those throw-up moves. Those are, again, they put the maximum amount of pain on people. They get all the weak money out of the money out of weak hands. And these turnarounds, these are pretty serious. I'm not a big fan right now, and I'm looking down the line. I'm not a big fan of shorting this right now until we get back up into that 904, 910 area. Can we get back up there? Is this a move to buy? I'm not a big fan of buying grain, so I'm just still looking for resistance areas. I mean, we could implode again and hit 825 on this thing. So just be aware of it. We're kind of don't have a lot to hang on to here. We're in the middle of a fair auction on the 240 from 860 to 904, and we don't have any new profiles attempting to appear on the daily. Remember, that's kind of an indicator in itself that we don't have that happening. So, we could drift lower on this thing. Okay, let's take a look at silver. Just to keep covering the bases here. This is our weekly, obviously, that 1582 a big number on silver to have to get through. Didn't happen. Rallied back up until, let me see how close we got to it. 1571, very close to that number, stayed below it. This is our weekly balanced area situation. So here's the numbers you got to pay attention to if you're playing around with silver right now. 1457, 1491. Those are kind of the inside numbers. We're right in the middle of a fair auction. Those are the ones that are predicating a range-bound situation. So any breakdowns below 1457, 58 are going to have to be paid attention to on the short side as a continuation. Okay, let's just checking something. We got a zillion things going on over here pre-market. All right, so let's see here. Let's take a look at December wheat really quick. I'm sorry, that's corn. So big number on December wheat, 506, 506 and a half. I was a big fan of placing stops around there. This is kind of interesting that we are coming up into some more resistance around 516. I'll be honest with you, wheat is looking a lot more longish than soybeans here, and I'll tell you why. We continue to edge up on this navigator here. This is kind of almost a pop scenario. I was looking for wheat to get sub 5 into the 4 range. We actually satisfied that. We went as low as 491 already this week, and 2 weeks ago we did the same thing. I'm feeling a little bit more bullish on wheat, looking at the big picture here. And would we like to have some more signs on this above 516? That's what I'd like to see. I'd like to see a daily close above there to get really interested in going long December wheat. Not playing around with it until that happens. All righty, let's look at the XLE. This is the situation that I was looking at as a sign to get long crude oil. When we were consolidating around there, that didn't happen. Stops were enacted, and this is a very, very good reason why you use stops. All right, this hasn't panned out very well, and we are, what is 1070 then? We're about 13% lower when we're consolidating on this particular product. Now, what does that mean relative to crude oil? So let's go into the October contract. You guys know, if you've been watching the news, this thing got sub $38 yesterday a barrel. Here's the situation on crude oil, 39.65, number up top, 38.02 down below. Do I think it's time to go long crude oil now? No, I would like to now. When we talked about that 41.75 on the September contract, right now on the October contract, I'd like to see a new demand area happen down here. There's nothing to really, we're looking at this as a long-term possible turnaround and trying to get our risk-reward ratios in line. And right now, we just don't have anything to hang on to. I think this is a sit-tight situation on crude oil right now, because all the signs we were looking at before have obviously evaporated. So right now, this is kind of a sit-tight. All right, let's take a look at the Canadian dollar. This is one that's been very interesting to pay attention to me. I've been looking at it for a while. You know, really, really good sign for longs on this. The new numbers to pay attention to on the support scene. Let me see if I can get this out of the way. On the support scene is 132.14, and then you got even bigger support down at 129.32, which it used before. Right now, we've got an orange bar appearing here. This may be a little bit of a target-rich environment for the Canadian dollar right now. So I would, wait patiently on this one too. But it's amazing how this thing is held up in the face of the dollar becoming devalued. It just hasn't phased this particular product. That's a great sign in itself. Here's the 240s. Again, you've got that inflection point lining up about the same as the daily there. Still not looking to short the Canadian dollar, put it that way. All right, let's look at Apple really quick. All right, so if you guys caught it at 92, that was let me see here. Hold on. Was that the low 92? That was amazing. So here's the, let me see where we're at pre-market here. 108.40. All right. So again, there's nothing, no new indications on the daily or the weekly. Apple, just like the rest of the market, very confused. Here's the 240s, 109.80. And see how that's acting now? 109.80. You've got some targets down below, in my opinion, of 103. I think you can pick up some points in Apple on the short side, and I think the market's, make sure you put your stops in, but I think the broad market might give you some help here and just kind of relax a little bit and come down to 1900. Apple runs the market sometimes, but I don't know if there's a lot of investors out there right now willing to step in and back the truck up. So you may have some people just glad that they got a little bit of a bounce to get out of some of the nightmares that they were in. You got to always think about that. Let's take a look now at Netflix. Now, the other day, and this is interesting to show you guys. The other day we talked about it. I'm not going to feel rosy about shorting this thing, and these are ones where you can really pick up some points when they start breaking down. As you know, 119.73, we started gravitating in momentum below there. This was on Thursday, all right? So as we look at this, that was the clear sign that it was finally okay to get on the short side of this stock. And my God, this is 40 points. Unbelievable. But what happens is you got to at some point be willing to look at targets on this. So first targets were around 100, and then we got the bounce yesterday at 85.93. And look how this works, folks. This is all in the scanner. These levels are predicated on those mouse overs. So what do you do with this now? So pre-market, we're trading 104.39, gapping up with the market, 104.39. I think you have to wait now and see what happens around 100, 101 on this stock. Do I think you ought to short something without anything to lean on? No, I don't. I think you need confirmations. I think you need the market open, and I think you need to see how Netflix is acting relative to what the futures are doing, and especially the NASDAQ futures. And if we can get back down below 101, I think you've got an opportunity to just get back into the fair auction balanced area on Netflix. Let's take a look at our buddy IBM. God, this is so beautiful to watch. If you're a long-term investor in IBM, I hope I've tried to get you out of this thing. I hope you've paid attention to that. This company, and this is how you really clarify things on how to trade some of the instruments within the indexes. You want to see how some of these stocks are opening using the scanner, and you want to see how the relative strength or weakness is within some of these internals relative to what's going on with the indices themselves. We're going to take a look at IBM a little bit deeper when we come back, guys, but had a nice pullback in this.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of The Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartley's, butterflies, ABCs, and Fibonacci in order to trade these markets. Trade what you see. Next on TFNN.
Hi, guys. Welcome back to the show. Let's take a look at IBM really quick. Let's finish up with that. This is one we've just been literally pounding the desk about on the short side. 167 was the area we talked about, the breakdown on that week. We actually got stopped out of it the 2 weeks beforehand, but this is why you keep getting in there, getting your hands dirty with certain situations that are ripe opportunities. If you get stopped out, you get stopped out. This is a daily situation. Nothing happening here. Getting a little sympathy gap up this morning around 147. So what do you do with it now? Not a lot to hang on to there on the 240s. Not that concerned about this particular stock. I think it showed its hand early, and I love how this thing is breaking down now. Again, if you're a long-term investor, this thing could head lower. Just be aware of that. And I think the worm is finally turned on this stock, and I think personally we could get sub 100 on this, believe it or not, no matter what happens. Let's take a look at Coca-Cola. Got a lot of emails about this one. This is a core holding for a lot of folks out there. So, you know, just from an investor standpoint, this is not a day trading stock, in my opinion. We closed at 38.38 yesterday. And there, you know, what do you do with this? That's the big, you know, this is one, that's a big pullback in a core holding type stock from 41 to 36 intraday yesterday. But right now, you know, a lot of stocks have broken down. My broad thoughts on the market are is 2060, as we talked about on the S&Ps forever, was that big number that we had to get below. There it is. That's the big number. So as Joey was talking about this morning, the worm is kind of turned on these things. I think when we get rallies like this, you more than likely can sell them. And what does that mean for Coca-Cola? That means I think that the broad market is the tide that may drag this thing out with it. That's my thoughts on Coca-Cola. Is the worst stock out there to be in? I don't think so. But my thoughts are the broad market, you're going to have to pay attention to some of the inflection points we look at on a day-to-day basis. And possibly keep that in mind when you're looking at your core holdings. Procter & Gamble, nothing really escaped yesterday, but the cool thing is we had looked at the scanner to try to identify what stocks had been showing their hand early. Now, this is one, again, the inflection points to pay attention to. I'm a big believer in what we talk about every day. Now, what do you do with this now? Pre-market, we're trading $70. There's no new profiles attempting to appear here. That's a bad sign that we more than likely can continue to go lower. It's amazing how some of these stocks have pulled back, but this is good proof of concept in a relative strength trading environment. You want to find weak stocks to sell when the market's going up and those stocks are showing their hand and the scanner picks those out. And this is just a natural evolution of how that works out on a relative scale too. You're looking at strong stocks in a weak market. So in a market like today, we've got a pretty serious bounce, but if you're looking for stocks that held up, these are long-term weeklies, and there's, Hospira, HSP. These are ones that were not really getting the heck kicked out of it yesterday. OneStream Holdings, Edison International, Google. Let's take a look at Google here really quick. God, we're going to have to close the show. Here we go. Google's still got big support down here on a long-term basis. Obviously, that 634 is a big number. Stay tuned. Larry's going to be around. Sorry we couldn't cover everything I wanted to cover today, guys. We'll be back tomorrow.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.